Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. We're also going to go over GDX versus other ETFs to see if there's any opportunities there. GDX and SILJ. With gold moving as large as it has, sometimes you want to go back and revisit some of the ratios to see how they're working with each other and how they're moving up and down together. So we'll see if there's an opportunity for investment over in gold and silver and what it looks like. So let's start with Twitter here. You can find me at finding_finance, or you can join our community here. We do have the word discount for the coupon code. Scrolling down, so it's for your information. Here's our current supply forecast through the end of the year. Horizontals only, but you get the picture. Pretty flat here, guys. We were coming up from 2020. We came up, and now we're starting to kind of come back down. Is this going to actually roll over for oil forecasts for horizontals? I don't know. Kind of looks like it to me. If you notice all the production here, these things that have fast declines, that's all shale. A lot of that's shale. You can see there's not much decline rates down here. And then you can see all these new ones that are coming online, massive decline rates on what they're bringing on. So kind of interesting there. Qatar is threatening to create a global gas shortage, natural gas, in support of Palestine. If the bombing of Gaza doesn't stop, we will stop gas supply of the world. This is going to get real interesting. That's for sure. Eric says, no explanation necessary. It just shows the chart, energy 90, 80, and 70, free cash flow yield versus the enterprise value divided by earnings before interest, tax, etc. So these are the best value in the market, energy across the board. We've got North Star here. He says, gold measured in world currency units. Ignore the noise. Focus on the signal. And we've got a back test and a breakout moving to the upside here, where gold is one to look at. And that's exactly what we're going to do is we're going to go look and see what that looks like here in a little bit. Just in, the U.S. posted its third largest deficit on record in 2023, spending $1.7 trillion more than it brought in. This was a $300 billion increase in deficit spending compared to 2022. The U.S. is now spending 44% of gross domestic product per year, the same levels as World War II. Look at the deficits here, guys. We had smaller deficits, a little bit of a surplus with the stock market going into a bubble under Clinton, then just straight on massive deficits from 2020 onward. Is this going to be a problem? Sure looks like it to me, but we'll see what happens. Tommy says, for those who need to be reminded, triple tops never work. Triple tops almost never work, and we could see a big move in gold. And we're going to look at gold here shortly. Peter says, gold and oil are finally moving in the same direction, with oil now up over $3 a barrel and gold up $23 per ounce. If this correlation continues, it shows that gold investors are figuring out what bond investors already realized. Higher oil prices reflect rising inflation. And Peter below it says, solid action today for energy equities between ongoing geopolitical risk, stellar Q3 earnings on tap, and the end of U.S. oil roll tomorrow. The stocks are mispriced and due to re-rate. We will see more oil inventory draws in coming weeks as Saudi Arabia exports plummet. Grady says the global asset paradigm shift has started away from paper assets toward hard assets. Totally agree. Even though Canadian, he's talking about the Canadian dollar, Canadian exchange, rose 240%, its baby bull from 2020 lows. It still has underperformed tech. When, not if, this chart breaks out, the tide is turned. And we've got the RSI is coming on up. We're probably going to see a break here at some point of the Canadian. Um, Paul Krugman says the war on inflation is over. We won at very little cost. And then Lone Wolf says oil bottom is in. And that was before October 13th when we had the big $5 run up. Let's go in. Let's dive into uh, let's dive into gold and silver. So gold, as you can see, we were cruising along. We broke out to the downside. I said a little while ago, what if this is a false breakout? And right down here, yep, we were looking at some of this stuff, definitely the physical metals. And we've broken back up above some of these support resistance trend lines. Is there an opportunity actually in the ETFs? Is there opportunity? And that's what we're going to look at. Silver also has a pretty strong move upward. We'll see if that momentum continues. Gold's our leader. So gold's broken back above those support levels. Silver's just going to follow whatever gold does, in my opinion. So let's go down. Let's look at some ratios together and see what is going on. So if we go to GDX versus gold, GDX versus gold, we've got a downward momentum, sideways momentum. This is your basing pattern on the bottom here. What does this all mean? It means that your momentum is done. We're just basing out, moving sideways. And we're at a very low level. Now, if we look at a lot of the commodities in relationship to their futures pricing, they're almost all very cheap. So uranium is cheap, natural gas is cheap, Baltic Dry Index is cheap, GDX, the gold and silver mining companies, are cheap. And when looking at this pattern, you've already got the base established. We're just waiting for this to break to the upside, basically. And with the current move, are we going to get a break here? And that's what we need to be watching. Everyone should be watching this. Why should everyone be watching this? Because, one, it is at one heck of a cheap valuation, guys. Look at this valuation. If I were to put a horizontal line here, put the horizontal here, we put it right where we're at. That's where that valuation is. There's only a few times in history, 2016, the breakdown in 2020, from where we are today. I think that we should be watching GDX, GDXJ, and SILJ like a hawk. If we get continued strength in the futures pricing in gold and silver, we need to watch this. These are going to be very good opportunities, I think, either right now or very, very soon, depending on the style of investing that you adopt with it. So here's GDX versus REMX. This is already moving up. This looks very good, like very, very good. So GDX looks good against rare earth metals. GDX also, SILJ. This is a reversal candlestick. SILJ, SILJ, SILJ. What are you doing, buddy? Look at the wick at this top here, guys. This is a wick. So usually what happens is you get a squeezing up, a breakout. Then we have another squeezing up, breakout, and then one, I think, final last kind of hurrah up to the top there. This, I think, could potentially go down, and this could be the bottom in SILJ. Now, we're looking at it as a ratio, as a top, but I think it's possible here, guys. See these wicks at the top? You usually get these wicks at the top wherever you get some selling pressure. And I think the momentum has switched, and we could head down here, and that is something that we should definitely be looking at. GDX versus uranium. Is this putting a bottom in here against uranium? It looks good. It looks good. And, you know, you don't have to do one or the other. You can accumulate at these really low points for some of these metals here. So that looks really good. GDX versus XOP. What do we have here? We have a basing pattern of very low valuations for GDX. GDX outperformed. It did a breakout. And now we basically did a retest here, broke out, pulled back, and I think it looks pretty dang good for GDX to outperform XOP even. Very possible. So that's another one to watch. And we can draw a trend line through here as well, which has broken to the upside. So that looks very interesting here for potential outperformance. We've got GDX versus COPX. You can see a clear breakout of that trend here, and it's a bullish engulfing on the monthly candlestick. This looks really good for GDX to outperform copper, and we're at a very low valuation. God, that looks good. GDX versus OIH. So we had basing pattern here where OIH was outperforming GDX. We had the yield curve uninverted during this time frame. So we had a yield curve uninvert, the curve inverted this way. And now we have a breakout and a potential retest down here. And to me, it looks pretty dang good for a potential move to the upside. Looks very, very good. Kind of a squeeze up and a breakout. It's just been moving sideways. And moving sideways, sometimes these things move sideways for a little while before really starting to take off to the upside. So that looks good, even against the energy service producers. Looking at SILJ versus some of these other ones. SILJ versus silver, very cheap. Very, very cheap. Now, it didn't outperform silver itself a couple of these, past weeks, but it's something to watch. We've got SILJ versus OIH, another one that looks like it's trying to turn around. We've got a bullish engulfing here this past candlestick Friday. We have a basing pattern, a breakout, and then a full-on retest. And I think we could potentially outperform at some point if that yield curve comes back down. SILJ versus XOP, another one that looks very well priced. And you know what this looks like, guys? It looks almost like kind of some sort of Livermore cylinder that is developing, maybe. That looks crazy. SILJ versus URNM, very, very cheap. We've got some momentum coming on up. Is there going to be an outperformance here, or are we going to get a scare, one last scare out of this? Tough to say. SILJ versus REMX, this also looks good. It looks like it's ready to really break out of this, where SILJ could outperform REMX. Got a nice big candlestick here on the right-hand side. Notice that the lows continue to come on up. Guys, I think this looks pretty good. I mean, right up against resistance here. I mean, this thing is ready to go. SILJ versus COPX, another one that is getting a lot of buying pressure. Well, a big ratio change is what I'll say. Big ratio change. This thing is ready to break out at any second. It's at a very low valuation as well. And then SILJ versus TAN. This also squeezed up, kind of breakout. Now it's starting to get some momentum to the upside for the ratio, that is. A nice big candlestick today. So, looking across the board here at all these, I think gold, GDX, the gold and silver mining companies, they need to be on the radar here. And silver companies. Another thing that we can do, and I'll do this for the members, is we can look at the ratios of individual companies divided by silver itself or gold itself and look to see where they're at. I kind of did a little bit of look on some of them. They look incredibly good. One of the setups that I created or that I traded was SM Energy versus natural gas. And what I did is I traded the ratio. So basically, you've got kind of this, we'll call it almost like a Livermore accumulation cylinder here, where you go 1, 2, 3, 4, 5, 6, 7, and then your break higher. And I guess it worked on the ratio. We have a big consolidation, 1, 2, and then the third one's that small one. And I bought at the tip here in September, October of 2020, right in that tip. That's where SM Energy was $1.50. It's now over it's like $45 or so. And this is the outperformance and the breakout of SM Energy against natural gas. So you can look at some of these ratio charts and evaluate where could be a potential I'll say, where is the ratio maximizing your symmetry? So what is symmetry? And I'll go over it real quick. Let's say the ratio goes up and down, and I'll use natural gas for an instance here. So 1 second, let me get to natural gas. So looking backwards, we had a really, really low ratio here in natural gas in this time frame. So it was really, really low down here. It was starting to come up in September, and that's when I got really bullish on natural gas. So that's September. That's natural gas versus platinum, very cheap ratio. All it's saying is in history that this is kind of a bottoming point. That's all it's saying. You know, in this range here, it's a lot of support and it's a bottom. Nat gas versus gold, another one that was really, really cheap down in this area here, which means that your rewards are up here and your risk, downside risk, is basically nothing because that's where the bottom of the support is. So it was really cheap in that area against that one. Natural gas versus uranium in that same time frame was in this general location there. You can see September was still it was bouncing all around. So it was cheap there. Natural gas versus crude oil in that time frame was starting to move up, is right here. Starting to move up. We had natural gas versus copper. That was like in this area back here, very cheap. And notice how it went all the way up. That's how I gained a lot of purchasing power. Nat gas versus Dow Jones was all the way in the corner over here. And I figured this is just waiting to break to the upside. It broke out, did a retest, and it's still at a very good location. If you're looking at natural gas companies and natural gas itself. Natural gas versus palladium. Back in 2020, if you look, we were at a very cheap location versus history. You can see that we are coming on up, and we're starting to make higher lows as well. I think we could see a big outperformance in natural gas. Natural gas versus Baltic Dry Index. Again, we were at very low levels down here for the end of 2020. So that's what I'm doing. That's the approach that I've got. I've got on a relative basis, what is really, really cheap against other sectors. Look at that sector. If it's really, really low, I'm going to start digging through the companies. How do I know what companies are good? How do I know what companies are bad? You're going to have to look at the charts. That's how I decipher what's good and what's bad. Right now, when I look at gold and I look at the yield curve, let's look at the yield curve real quick, just to show you guys this relationship. The yield curve, I'm going to look at the TYX TNX because that's the one that best tracks it. And I'm just going to put gold underneath. So the yield curve is whenever we're at very low locations, like here, or here, or here, or here. Basically right where we're at. You could have bought, right when it started to bottom, you could have bought right in here, gold. You bought right in here, this little consolidation point, and then the next move up. You had this next point right down here. And then we have the point where it just came recently. And you could still be accumulating even at this point here. We also have a potential break. If we draw this across, you can see that we've broken out. We're doing a retest move, and I think we're going to move to the upside here at any second. So those are really good areas to be looking. And guess where we're at? We are at a potential area that looks very good. We are right down here. Now, could this go sideways a little bit more? It could. But what strategy could you deploy if you're at a low ratio down here? You're at a low ratio. And this thing is bouncing on the bottom here. You don't have to buy everything in one shot. You can cost average in, nibble here, nibble here, nibble here, nibble here, nibble here. Just keep buying and cost averaging and trying to get the best price possible in gold and silver for physical metals, or you can buy it in the equities. Now, the equities are a little bit different play. It's not as straightforward. Gold moving up does not necessarily mean that the companies have to 100% move up. The companies are based off margins. So you're looking at the difference between basically gold and crude oil. So this is one of the charts that you might want to look at just to see what this difference is, and maybe I'll throw GDX underneath it let's just make sure this has a good movement here. I hate this how it went negative and positive. Let me overlay it real quick here. And what you're probably going to see is whenever gold starts, it's too hard to see with that. But there's a relationship here where when gold outperforms crude oil, you're going to see the miners start to, I think, potentially outperform. Now, what's going to happen going forward is difficult because no one knows if we're going to peak and have that curve uninvert. No one knows if oil is going to go up or if gold's going to go up faster, and what the rates are. It's a complex situation. So if you want to play it directly, I mean, physical metals are the way to play it directly. If you want to play the gold and silver mining companies, we need to see, I think, a slowdown in the markets, the yield curve uninvert, have gold go up at a faster pace than crude oil, and then I think the miners are going to go. That generally occurs when they reliquefy the system. What that means is you get into a late stage in the cycle, which could still last for some years. We get late stage, we get a turnover in the yield curve. Gold starts to take off, the physical metals take off. Then generally they reliquefy at some point. They use stimulus. That generally happens after a housing market crash. If you look at China, they had a housing market crash recently. What are they doing? Stimulus. Same thing's going to happen here. If we get a housing market crash, which I don't think we will, but if something like that were to slow down, or if there's something wrong with the bond market or something like that, they could do QE, which is stimulus, or some other stimulus package plan, whatever they want to do. That's when gold really hits it. That's when the gold and silver mining companies hit it for a good 6 months, 7 months, 8 months. They just go boom, they hit it hard. And then generally, crude oil and all the energy follows after that. So we're at very cheap levels. The yield curve's inverted. Is the yield curve going to uninvert here? We want to watch that. Are yields going to drop? Or are they going to continue higher and crude oil and energy continue higher? Right now, we're watching that, but I would say crude oil is still good. Sometimes these overlap during certain portions of the market. We could see crude oil go up when yields go down for a while. That's a possibility. While gold goes up with it as well. That is getting later in the cycle, like very later. We saw that in 2008. Now the yield curve. Let's just go back here real quick. The yield curve started to uninvert during that cycle. Here's the last cycle. It's just so you guys can see. We compressed it all the way up. It hit it in 06. It did a double top in 06. Then when it started coming down, the yield curve started coming down. This is 07. And it came all the way back down, 07, 08, January 08. We had a bounce, and the crash occurred over here. Crash is over here. So that was when the crash occurred back in 2008. You could see that if we were to look at oil, and I were to yank up oil here real quick, here's crude oil. I'm going to put it on. You can see that the spike occurred late over here. So the yield curve inverted, it uninverted to some degree, and crude oil kept on moving. And then it peaked, rolled over during this move lower in the 2-year, 10-year. At the same time, we had simultaneously gold and crude oil going up together for a period of time. That occurred basically in 02, all the way onward, all the way to 2008 peak. and then we had a crash on both of them. They reflated it, and you can see that gold did very well under that reflation here. Very big move. Food oil did well too, but gold did better, I think, because whenever they reflate it, it's almost like gold just takes off. Silver just rips it. Now we can put silver here. This is the silver futures pricing underneath that. You can see that silver is very sensitive. So silver took off here too, did pretty good, pulled back, and just went for it when they reliquefied the system. So that is when silver really took off in 2009 all the way to 2011. So those are that's kind of what the last market looked like. Are we going to start to head lower here in this? And I wish I could tell you yes, but it looks like it. Are we getting a bounce higher for a period of time? Maybe. It looks like it's bouncing higher in the short term. So kind of an interesting read here. I know some people said, yeah, it's rolling over. This is also, I just want to make a statement here. This is a falling wedge. That generally breaks to the upside. What if this is a false breakdown and we actually break higher? I don't know. That's what I'm going to watch. I don't know if we're rolling over and going to go lower yet. So very weird situation there in the markets. It's kind of faking everyone out in terms of, is it actually going to uninvert, or is it going to stay higher for longer? Powell says he's staying higher for longer on the short end, so we'll see. That's all I'll say is we'll see. But yeah, gold and silver look pretty good at the moment. We want to watch that. They're very cheap, but are the right market conditions here for this to all work? Don't know yet. Don't know yet. We're going to have to wait and see. All right, guys, that's what I've got for today. Thumb up for the content, subscribe to the channel. And if you guys enjoy this type of analysis, I do a lot of this on the website. You can ask me directly. We can look at specific companies. We can run these ratios against specific companies. It may not be as good against maybe some of these really small market cap junior exploration companies, because it really depends if they find something or not. But the producers and small producers and medium producers and large producers, it works pretty well with. All right, guys, we'll catch you later. This is Finding Value.